Hi, and welcome back to our asset allocation video series. This is part 2 of a video series where we're talking about how you can do asset allocation yourself and understand how you want to allocate your money across different types of investments. So as I mentioned, this is part 2 of the video series. In this video, we're going to dive into what I call layer 1 asset allocation. If you recall from part 1, I told you there are 2 steps to asset allocation. Step 1 or layer 1, you have to allocate your money across different asset classes. So that's what we're going to talk about in this video. I'm going to walk you through what I think the different asset classes are, tell you a little bit about each one, and then I'll tell you about how to think about starting to allocate your money across the different asset classes. In future videos, we're going to dive into layer 2 or step 2 asset allocation, which is allocating your money for investments within each asset class. So once we decide the asset classes we want to invest in, then we have to allocate and diversify our investments within that asset class. So as I've mentioned a number of times, this is a multi-part video series. I know there's a lot to cover here. I've thought about maybe putting a course together on this because there's so much information to get through. Tell me what you think would help you the best. Put something in the comments about how I can best help you understand asset allocation and equip you with the resources and information that you need to do yourself and to do your own managing your own investments and deciding what you want to invest in. So with that said, I'm going to go ahead and dive right into the different types of asset classes. So there's 2 slides here. There's 10 different asset classes that I've broken this down into. The first few are things you're probably familiar with. So I'm not going to dive into detail on each of these asset classes in this video. As I mentioned, for most of these, I'm going to do separate videos on them so that you understand. For example, first asset class is stocks. So how can you think about allocating money to stocks? So let's say you want to allocate X percentage of your money to stocks, that asset class. How do you then allocate that money within the asset class of stocks? So layer 1 asset allocation is here. Layer 2 is here. So this is the asset class, the big, category that we're thinking about. And here, these are just some examples. This is not exhaustive of all the different types of investments you could make in the stock market, for example, but these are just examples to give you an idea. So we will dive into these more in future videos, and I'll share my approach to this. I never give investment advice, and nothing I ever say is intended to tell you how you should invest your money, but I'm happy to give, thoughts on how I personally approach this so that you can kind of see real life examples. So just to dive through the first 5, I think these are probably ones that you've all heard of. Stocks, we all know about the stock market. This is available to everyone. I know there's some of the savviest, most sophisticated investors I know don't allocate anything to the stock market because they hate it and they think the returns are too small and that it's too volatile or whatever. But stock market, that's a big one. You can start investing in stocks if you have a penny. So, really anyone can invest in the stock market. It's definitely something everyone should understand and learn about. Fixed income. So I split up fixed income and debt. I know most people would loop these together and group these together as one asset class. Debt is, yes, a fixed income, that it could be within that umbrella, but I break those apart, and that'll make more sense when we dive into layer 2, where I talk to you more about these different types of investments. I think these are very different in the way they operate. So fixed income, think your bonds, T-bills, money market accounts, CDs. I avoid this asset class. I feel like, annuities, I've got annuities in there. I do not think annuities are investment. That's why I put this asterisk here. Annuities are really, when you understand that, you're really just kind of purchasing a future income stream. It's really more of an insurance policy. And they, in my personal opinion, they don't really make sense, for anyone other than the companies that are issuing these. I personally think that this asset class, especially annuities, money markets, and CDs, this is the kind of stuff that our grandparents did. And we can learn from them that a lot of these investments don't really make sense. And it's really just companies that are out there selling us junk like annuities. So that's my personal thought on fixed income. I know a lot of people invest in bonds, T-bills, things like that. I personally don't invest a lot in these, and I'll dive into that more as to why that is and, what you can expect from these types of investments in the future. So I pulled out debt. So I know, these can all be considered the same because they are fixed income, but I think of debt as very different. I think it's important to think of that because that's a very complicated asset class and there's a lot you can do within it. And it may seem the same, you're lending money to someone at the end of the day, but it's very different in how these different types of debts and arrangements work. So, debt funds, for example, are a different type of investment than a bond. Different types of returns you're going to be talking about there, completely different in the way that they operate. So I pulled this out and I will talk about these, more in future videos as well. We all know real estate. So real estate can be very different. I'll have a lot of videos, I have a lot of videos on investing in real estate. I think this is very important. I do not think you can build wealth unless you're investing somewhat in real estate. So there's all different types of ways you can invest in real estate, and there's different types of assets or investments within the real estate umbrella. When you think about how you can invest through a REIT. You can invest by going out and buying properties yourself. You can do Airbnbs, short-term rentals. You can do that yourself. You can actually own those properties or pass it off passively and, have a property manager in place, but you own those investments. Or you can do what I do a lot of, which is invest through real estate funds or syndication. So I'll talk a lot about that. I have a lot of videos on this. I think this is very important. There's not a lot out there. I think a lot of people make the mistake that they can invest in REITs and get a lot of the benefits. I don't invest in REITs. I don't like REITs. I don't touch them. I'll have other videos on that, but there are other, in my personal opinion, better ways to invest in real estate so that you get a lot of the benefits from that. Also, in addition to the types of ways you can invest in real estate, from owning it yourself through a fund or whatever, there's all different types of real estate properties. So you've got raw land, you've got, residential buildings, single family apartment buildings, commercial buildings, industrial warehouses, all different types of real estate. They're very different. You wouldn't want to go out there and, if you say 10% to real estate, you wouldn't want to go out and put that 10% in, single family apartment or single family residences or one big apartment in Georgia, for example. So you've got to diversify once you, get your asset classes, then you got to get to layer 2. And I can tell you with real estate, layer 2 is where it gets really complicated because there's so many different types of real estate that you can invest in and own out there. So that one's one we're going to talk a lot more about, and I have a lot of videos and we'll continue to have a lot more content on that one. Businesses. So, here's my personal opinion. I'm very, opinionated about this. I think this is really important. I think if you're trying to build wealth, you think about differentiating between bringing in your money, so your source, like your day job, for example, as opposed to, investing. So, you can invest in businesses and still have a W-2 day job 9 to 5. So I know a lot of very successful, it's usually C-suite people. So people that are already making a pretty high salary, they'll own a business on the side, or they'll start a side hustle. When I had a consulting business, I worked with these types of people a lot, and it was so great to see because they're not, just getting all their money from a W-2 job, which is, I think, very risky. They're diversifying by owning a business that, in a couple of years will probably be something they can shift to running full time and replace their salary. So you do not have to, be a full-time business owner to invest in businesses. You could also invest in businesses, there's all different types of businesses. I think we all know that. There's different industries and sectors. So, sometimes there's some crossover between asset classes. For example, if you're going to invest in large businesses and, you're also a private equity investor. So, there's some crossover there where you might invest in large businesses through a private equity fund. So that's a different asset class we're going to talk about in a minute. But I personally think you need to be investing in businesses. And I'm also a big fan of bringing in money through businesses. So, as a business owner, sometimes I 100% own businesses. I don't have a W-2 job, and I never will again if I can avoid it. But, this is my own 2 cents on this. I think that you should be bringing in money through a business partially. So I'm not talking about just investing. So you've got, you're making money where the source of that money comes from in the first place, as opposed to investing money. I think businesses are the best way to build wealth efficiently, quickly, and sustainably is through owning a business of some sort. As I've mentioned, it doesn't have to be full-time. It could be a part-time side hustle, but I would consider, people don't think about this when they think about asset allocation. I know a lot of people at W-2 jobs where they've got 100% of their money allocated between maybe stocks and fixed income. And you got to consider business. I don't care if you are the CEO of a company making $5 million a year, you've got to consider allocating some of your investments to businesses. It is the best asset class, in my opinion. Is the returns cannot be exceeded by any other asset class on a sustainable level. And, the tax benefits are just huge. So businesses, you got to consider that. Don't just assume you don't have time for it. You can invest more passively in things like franchises. I'm not a big fan of those, but in any event, consider it. Don't forget it. It is an asset class. Whether you're a business owner or not is something you need to be thinking about. So the next 5, these might be a little bit less familiar to some of you. So, and these asset classes aren't necessarily available to everyone. So unless you're an accredited investor, or unless you're, in a lot of cases, a qualified purchaser, you're probably not going to get access to a lot of these investments. So, keep that in mind. But if you really want to build wealth and understand what that journey to financial freedom looks like, you've got to understand this now. You need to learn this now, and you need to understand what you're working towards and why. So private equity is this is probably one of my favorite types of investments. I have a lot of, my own personal money allocated to this asset class. There's all different types of private equity companies and focuses. I do this through funds. Of course, there's people who go out there and, put together their own fund, or maybe they have enough money themselves that I know people who are doing private equity types investments themselves with their own money. But for my purposes, and for I think most of us watching these videos, we're talking about investing in private equity funds. So I'm not going to spend too much time on these. I'm just going to kind of run through these so that you understand the asset class. Venture capital, that's more early stage companies. So you're looking at getting there early before the company's public. You could say this is a lot more risky. Obviously it is. There's different ways to invest in venture capital that I think, help reduce some of that risk and also give you exposure to a lot of different industries or a lot of different companies. So I'll talk more about that in future videos, but that's a separate asset class to consider. I'm a big fan of venture capital, especially because of the tax benefits you get from that one. Hedge funds. So full disclosure, I don't invest in hedge funds. I'm not really a fan of them. And also when I talk about, in a minute, the types of assets that are available to you to invest in, think about the quality of those funds. So hedge funds, you think about like uber wealthy people, like hundreds of millions of dollars to billions of dollars. Those are the people that are really getting access to these big, huge hedge funds, or things like pensions, things where you just have a big, huge pool of money. But there's all different types of hedge funds. I know people who invest in hedge funds. I get it. It just doesn't really align with my personal investment philosophy, and I'll tell you more about why. But you got to understand that's a separate asset class, and it's something that, you might want to think about, at least understanding that this is an asset class you could potentially consider. Crypto. So we all know about crypto. We've heard of it. Again, that's a very unique asset class. I'll talk about that in different videos. I certainly have, some of my assets allocated to crypto. I think I could not be more bullish on blockchain technology. And the more and more I learn about it, the more I just believe in it. Of course, you can get yourself into a lot of trouble. A lot of people don't understand crypto, blockchain, and how it works. A lot of people don't understand that. That's just the big umbrella. There's a lot of different ways you can invest in crypto, and like even within different cryptocurrencies, they're all very different. You've got to understand those use cases and what you're investing in. So I put this other category because yes, there's other types of investments that you can make, foreign currency collectibles, derivatives. I don't really touch these types of things. Precious metals. A lot of people like to own gold. I dabbled in that in the past. I don't invest in these things. I'm not saying they're bad investments, but it's just not something I spend a lot of time on. To start investing in foreign currency, the amount of time you would have to dedicate to that and whether or not that would be successful, I don't know. I mean, I know there's people that have had success there, but it's just not something for me. So if you are looking for more thoughts on these types of things, I'm not going to give a lot of content on this channel. But, I wanted to let you know that I recognize there's other asset classes you certainly could consider if they make sense for you. So those are the 10 asset classes. Those are the buckets I think about them in. I know some people put them in different buckets, but that's just how I think about it. You just need to understand what's available to you to invest in. And again, on the left side here, we've got layer 1. So I'm not going to go through these again. We talked about these and we touched on these in part 1 of this video series, which if you haven't watched, you should go back and watch it. But remember when you're thinking about allocating across the asset classes for layer 1, think about why it matters. Think about what we're trying to achieve here and what the real purpose is. So go back and watch that video, understand what you're trying to do and why it's important. So now when we talk about allocating across the different asset classes, so layer 1, we're allocating across those 10 big categories. So a lot of this is going to come together once you watch, part 2, where we go dive into a little bit more the different, within each bucket. Once you understand allocating within those buckets and within each class itself, this will come together better. So if it doesn't, if you don't quite feel like you're at the finish line yet, that's fine. You probably won't be there until you understand how we allocate layer 2. So first things to think about, you got to be practical when you're talking about this. So what can I invest in now? When I dive into layer 2 asset allocation, I'm going to explain to you how there's a lot of investments that are limited to certain types of people. So for example, good quality venture capital, private equity funds, and I'm assuming we're talking about funds here. I'm not talking about, if you're going out to start your own startup, that's a different thing, right? We're talking about investing here more passively. So if you're wanting to invest in good quality funds, hedge funds, you're not going to be able to do that unless you're a qualified purchaser. So unless you have 5 million investable assets, those, in my opinion, the quality investments within those categories are not going to be available to you yet. So step 1, what can you invest in? Understand right now what's available to you. It might just be a few of the asset classes. It might be more than you think. So that's step 1 that's critical for you to understand. Step 2, this is obvious, expected returns. So I personally don't touch anything that's in my mind just lower than 10%. There's no rhyme or reason, to that return expectation I have. It's just a good rule of thumb. I personally think, in my opinion, the S&P 500 average index returns are usually around 10%. So to me, that's the least amount of returns. The stock market is kind of the worst type of investment I'm willing to make, if you could think about it that way. So that's why I don't touch those fixed incomes. I don't want some CD paying 3% or whatever. I don't want some T-bill. I don't want a bond for a number of different reasons, but what is your personal appetite there? What do you want for expected returns, and what's realistic for you, right? The more money you have, the more returns you can expect. And if you're willing to go out there and, invest in businesses, the returns are going to grow exponentially, at that point, as opposed to if you're just going to try to, buy a couple of rental properties, your returns are going to be much lower. So you have to think about that. What are your expected returns? What are you willing to sacrifice to get there? Level of risk, there's always risk. Crypto, some people think it's very risky, for example. I don't necessarily disagree. I think the biggest risk with crypto is that the vast majority of people investing in it don't know what they're doing, and they aren't disciplined long-term, hodlers, as we think about those of us in the crypto world. So I think that's the biggest risk with crypto. And I think if you're thinking about going in and turning a quick buck, yes, there were people who did that, but there's also people who win the lottery and people who win at Vegas. So I think of crypto as a long-term investment. I think, I really study blockchain technology. I don't think it's that risky from a long-term standpoint. I'm happy to allocate, some of my assets to that asset class. But what is your level of risk? I can tell you my dad right now won't touch crypto. So he doesn't. Also, his trajectory of investment horizon is a lot different than mine. But, I understand it. I get it. Some people can't tolerate, or people have different views of risk. I don't think crypto is that risky if you know what you're doing. But, I think people have different views of risk. So that's important. You think about that. And if you can't sleep at night, it's not a good investment, right? Like if you're going to be up all night worried about it, then it's not a good investment for you. So you have to think about that. What's your view of risk? And, how do these asset classes fit within that? This is a big one. Time requirements for, number one, background research, and number two, management of investment. So are you willing to invest the time to understand how the venture capital industry works? What it would mean to invest in a VC fund. Are you willing to invest the time to understand running a business? I mean, I can't think of anything that would take more time than understanding that. Are you willing to understand the time of, reading all the books and materials around real estate investing, understanding how to find good properties and how to manage those properties? And then step 4 is management of investment. So what are you willing to spend your time managing? I am just not, at this point in my life, going to spend any time managing rental properties. I don't want to deal with a property manager. I don't want to have to call a plumber to come fix a toilet. I don't want some tenant calling me at, 8:00 at night because something broke. I just don't want any part of that. I'm happy to invest in a fund that can handle all that and maybe lose some of the returns I can get there. But I am happy to manage a business. I'm not going to manage a business that's got a bunch of employees at this point in my life. I just don't want that headache. I don't want, a bunch of clients. I've gotten rid of my businesses, my service businesses that involve employees or any clients. So personally, that's just my own personal opinion. But if you're younger, or if you're, you're a little bit earlier in your wealth building journey, maybe you're willing to invest that time. So are you willing to invest the time to go out and buy a business and run it and run the day-to-day operations and maximize those returns? Are you willing to manage a bunch of Airbnb rental properties? Are you willing to answer that phone at 10:00 at night when something goes wrong? So you got to think about your own personal situation, what you're willing to put out there and what you're not. Access to quality investments. So just because you can invest in certain things, and I'll talk about this a lot with real estate. So just because you can invest in certain real estate funds, for example, it doesn't mean they're quality funds. So, I know sometimes real estate funds are available to people who aren't accredited investors yet. If you don't know what that means, you need to watch those videos and understand that. That's very important. You cannot achieve financial freedom without reaching that accredited investor status. So, just because those investments are available to you, are they good quality investments? So yes, there are some hedge funds I can invest in. I don't think they're the best because the best out there are limited to like the Warren Buffetts of the world. They don't care about me, right? They want people who are writing checks of like 10 million for one investment. So like, that's just not me. That's not where I am right now. So yes, I could invest in hedge funds, but is it the best quality hedge funds? Probably not. They're not taking smaller checks. So, that's what I think about when I'm thinking about allocating to asset classes. So it's important that you think about that. Tax consequences. So do not look at things on just a pre-tax return expectation. So you might look at bonds, or even right now where interest rates are, T-bills might look attractive, but think about these things after tax. Think about, T-bills is a bad example, but like if you've got a money market account that is paying interest that's higher than you've ever seen in your lifetime, that might sound great to you, but think about how much tax you're paying on the interest income. So think about things from an after-tax standpoint, and can you structure things in a way that are going to give you tax benefits? Real estate is the best investment you can make from a tax standpoint. It might not be the best investment you can make, but it's the best investment you can make from a tax standpoint. So you have to think about that. If it weren't for the tax benefits, I probably wouldn't touch real estate. The returns are pretty low. It's just kind of a boring asset class to me. I'm much more of a business gal. I really am interested in like entrepreneurship and understanding businesses and private equity investments, but real estate provides tax benefits. It also provides some other benefits like stability. It's a more stable asset class, but whatever. But you have to understand and think about things through that tax lens. Can you structure things in a way that your returns are completely exempt from tax like you can with VC funds? So do not forget that. That can be a huge potential for, should you or should you not invest in a given asset class. Lastly, this one's getting a little bit more complicated, but liquidity needs. So we all have points in our life where we need more cash than others. Maybe, we're saving some money, but at some point we got to start paying for our kids' college, or we got to, make a big purchase. So not a fan of buying homes. I'm kind of anti-home home ownership, but let's say, you live in some suburban area and you need to buy a home. So, you're going to need a bunch of cash then. So can you access that money, or can you get dry powder? Dry powder is basically the ability to access cash without holding cash. So, can you borrow against that asset? So real estate's great, right? You can do cash out refis and get more cash out of the property itself, especially when it appreciates in value, or you do renovations. You can also use SB locks for stock. So I think probably one of the only reasons I invest in stocks is the ability to use the SB lock strategy, which I, again, have other videos on that. But that allows me to increase my returns and also diversify in a big way. And it also provides some tax benefits. So what is the ability, to get liquidity out of that? If you're invested in private equity funds or venture capital funds, they're not going to be liquid. You're stuck there for a really long 5 to 10 year horizon at a minimum, probably. So, and you can't easily get your money out of that. So keep that in mind if you are going to have a liquidity need. So the last thing I want to mention here is that you may ask yourself, what is missing from these schedules? So I think an obvious one where a lot of people might disagree with me is cash. I do not personally believe that cash is an asset. I actually think I feel very strongly about this. If you understand inflation, I'm kind of an economist at heart. So when you think about inflation, especially we are in an extremely high inflationary environment right now. So if you're holding cash, you're just losing money. So it's not productive. You're not making any money. You're guaranteed to lose money. The value of that dollar is going to be less tomorrow than it is today. So, if you think about opportunity costs, which you have to understand, to be a good investor, you have to be able to understand opportunity costs. So, you've got to be putting your money to the most productive use possible. There are ways to access liquidity without holding cash. So I know a lot of people are like, well, I'm going to buy a home. Maybe I need to hold cash for that. I don't agree with that strategy. You could put that in a safe investment and then borrow against it to take out the cash when you need it, or you could sell it. Yeah, you're going to pay some tax, but it's better than that money just sitting there losing money. It's the one investment that you're just guaranteed to lose money every year, and that is cash. So that's my own personal 2 cents. If you feel like you need to hold cash and hold that as an 11th, asset class number 11, go for it. It's your own personal preferences and your opinions, but that's my view on that. So again, let me know in the comments how what can help you get through this and navigate this. I know it's a lot to dive into. We're just talking about layer 1. When we get into layer 2, it's going to get a lot more complicated and nuanced, especially when we dive into some of these like real estate and, things like that, where there's just endless amounts of different types of investments you can make. But this was part 2. Stay tuned for the future video in this series. There's going to be a lot of different videos about asset allocation on layer 2 within these asset classes.